Happy Halloween, everyone. Was it a trick or a treat today? Somehow I feel like I got tricked. As the Nasdaq fell 513 points, 2.76%, once again on pretty strong volume, 16% above the 50-day average volume. So you can see the last 2 days had some really strong volume coming into the downside. Yesterday it made a new high and then reversed. The high was at 18,785. It reversed lower. If I go to the 5-minute chart, we can see that move on Wednesday. Higher, there's your high of 18,785. Sell off into the close, gap down lower, selling off all day long. I talked last few weeks about how these mega cap tech stocks are going to move the markets. Tesla and Google were certainly fine and moved higher, but Meta and Microsoft, which I'm going to get to in a minute, dragged it down. And then we still have Amazon and Apple. And those are the drivers. The mega cap tech stocks are the drivers of the market. And, when you have headwinds like this, when the index is down 2.76%, you can bet your growth stocks are going to be down 5, 8, 10%, or even more. For the most part, not all of them, but I'm going to get to that in a minute. Anyway, when we have a whack day like we had Wacky Wednesday, last Wednesday, pull back to its 21. It was down nearly 300 points, 1.6%, then rallied up to make a new high. This is a little different though, because this closed at 3% below its 21. That's a big move, 1.3% for the index. It's closer to the 50 at 0.9% above the 50 than it is to the 21. So that's a big gap down. Definitely, you got to throw up the caution flag there. If your stocks are below the 21 in this tape, definitely time to start reducing, being more cautious. I would say, like if you have stocks that are up 20, 30%, you hold those. You have stocks that are up 2 and 3%, those are the first to go. That's just the way I do it, because I have more cushion to withstand, a sell-off. You could see something, we have no idea what it's going to do, but, we've seen this before, when it slices to 21, it happened back here on this candle right here. Let me get the date here. If I zoom in here on the April 4th, okay, we had a big rally, had that candle below the 21, it closed 1% below the 21. Then what happened? That could very easily happen again, slice everything. This rally currently is, here we have another slice here of the 21 on July 18th. And then what happened? Man, big sell-off. So, you take them, one day at a time. Like I said, we had the whack job. We've had some down days, but not closes below the 21 during this rally. In this rally, let me go to the weekly here. I believe it's about 11 weeks old here. And so it's getting a little long in the tooth here. And maybe we're in the seventh inning or so. But it's not the end of the world. And there's a lot of people saying, "Oh, the artificial intelligence revolution is done. It's fake." But if you listen to the conference calls from Zuckerberg and Microsoft, they're spending money like crazy. And Zuck just said he's going to spend, and spend, 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 and if Wall Street doesn't like it, too bad, because he thinks it's going to pay off in the long run. I'm going to go to the Nasdaq back in 2000. This is the run, from 95 to 2000, and you can see we know it was a monster rally, and there was stocks like Cisco and Yahoo, and it had these big moves. But look at how many times it traded below the 200. This is the 200, not the 50. You know, and still went on to make this big move, right? So just because it has a move below the 21 is not the end of the world. Yes, short term it could be trouble, but I think longer term, I'm talking longer term here. I think the rally is going to continue, even if it does pull back to the 200 again, or the 50. We don't know where it's going to stop. But you got to take notice of a day like today, a slice of the 50, 21 like that. So anyway, you got to be more cautious. So I'm going to pull out the yellow flag and be more cautious, just because the prudent thing to do at this point. You got to manage risk. And, we get to these earnings calls and, people will talk about Carvana, just these big moves. Yes, it's up 20%, may had a nice day, but there's way too much risk to be getting heavy in front of these earnings reports. And I'm going to get there in a minute. But first of all, I'm going to take a look at the earnings reports that are positive. I'm going to take a look at some negative. Then I'm going to go through some relative strength stocks. And that's it. I'm going to keep it short and sweet today, hopefully. Anyway, Carvana, big move on earnings. Congrats to the longs there. A nice little short squeeze. GoDaddy, this is one that I had on the ready list last week. I took it off, but I think this one's a buy, even though, you got to be more cautious. We had it right here when it broke above that downtrend line, and it made this little handle pattern, right? That little bull wedge that we've seen a lot as it pulled back to the 50. And now it popped today, 3% in a really weak tape. Super weak tape when you see the Nasdaq down two and three quarters nearly. I mean, that's relative strength right there. So a nice move. Steady sales growth. Nice earnings growth. This is a nice story here. We look at the weekly on GoDaddy. It's had a hell of a run, and this is the first base in a long time. So I'm going to show you some stocks that have looked kind of like that have faltered. So you got to be careful. But a nice move for GoDaddy. What other ones do we have? Oh, DoorDash. DoorDash, the quarterly, excuse me. Yeah, the report was good. You can see the accelerating sales growth, 23, 25 sales growth, triple digit earnings growth, very nice. And, this is just a nice pattern here. I think longer term DoorDash goes higher. Sure, there's going to be some turbulence short term, but yeah, that's a beautiful weekly chart. I love that chart. GEN, this is a cybersecurity play. Reported and tepid growth, but had a nice move of 8%. And another OSPN is another cybersecurity stock, 14% move. That sales growth was red numbers, which we don't like, but the stock was rewarded. So just pointing out strength and positive positive responses from the results. This is Root, an insurance company, up 69%. It was up like $120 and it closed at 69. So that's 68. How about that? It was up 118. 10% of the daily range. So that's what you get in a weak tape. The sellers, people get nervous because the index is just so darn weak. Lemonade, another one, insurance stock. Let me see here. 67% of the daily range, not bad. It was up to 25.40, closed at 23.77. So a nice 26% move for Lemonade. That's an old name from 2020, right? Yeah, I think that thing IPO'd in 2020 and it was pretty popular. Let me see. Generac, this is the power company. Did the old okey doke at the open. It ended up flat on the session, 67% of its daily range, because if you look at the 5-minute chart here, it did the okey doke at the open and was down. Yeah, this is a head fake right here. 157, then ramped up to 168. So that's quite a $11 range, and it just kind of sold off into the close, but still, pull back to the 50, not a bad looking move there. Bullish engulfing for the hurricane stock, right? Generac, the power generators. All right. Couple more, and I'm going to get on to the losers. Twilio had a nice response, at least earlier when I was looking at it. Yeah, that's power through the pivot right there with the RS line showing strength going through the moving averages. So that's a nice move, breaking out of a stage 1 base there. That is not to be ignored for a software company, especially in this tape. ETR, which is an Entergy utility. The utilities were one of the few sectors that were up on the day. This one was up 15% following its earnings report. And let me see, RELY. This is one that showing this accelerating sales growth here, 31, 39%. So it was rewarded breaking out of a stage one base. 17%, that's not to be ignored either. Yeah, that's a real nice move for Remitly Global. And let me see, what else do we have? Oh, the solar stock, NXT, it was higher earlier. I was kind of out of it today. I had dog training again. And yeah, so I'm not able to be on the screens or anything. I must be present. I don't know who's getting trained, me or the dog. Anyway, probably both. My Boomer trade is still intact here. This is Norwegian Cruise Line. The boomers are spending money. You can see these little wedge patterns here, pulling back to the moving average. Pop today, 6%. It was up a lot more. Let's take a look at the 5-minute chart, but it's just sold off. Yeah, like the market's just so darn weak. People are going to take profits. Another one in that vein, the cruise lines, the airlines. This is Alaska. It was up nicely, but closed near the lows of the session there, 24% of the daily range. And then booking, the boomers are traveling, they're booking their flights, they're booking their hotels, but they're not booking their rental cars or using Uber or some other way to get around. This one was up nearly 5%. Once again, I thought it was up more during the session, closed near the lows. Yeah, pretty common profile there where it sold off into the close. All right. Is that enough? I think that's enough. You want one more? We got a shipping stock if you're into shipping. So there's a lot of, different sectors, different groups of stocks here that are showing strength. This is a shipper that was up 16%. So now I'm going to get to the bad news. Those were the treats. Now I'm going to get to the tricks. I'm going to start with Shark Ninja because I want to talk a little bit about I have a formula for holding through earnings. I have a real propensity to just reduce a lot into earnings because you get, this type of a move. You wake up, you're down 17%. The heck with that noise. I just wanted to show like some of the worst days for Shark Ninja. It was down 5% back in January, and I think that's like the lowest. So what I do is I take the worst day in the past year, which is 5%, add a 5% stop loss. So I need a 10% cushion just to hold through earnings. And I don't want to hold big through any earnings because for every Carvana, there's a Shark Ninja. And this one is forming the shelf. We're riding the trend, total Kelly Slater stock. Um, but then what happened? Earnings, the Reg FD that went through in 2000s really causes high turbulence on earnings days. So they get the new data point. They don't like it, even though it showed accelerating sales growth, 16, 25, 31, 33 hike. But and the margins were good, and I don't know, the Wall Street just thinks it's over, right? The story is over, so just sell, shoot first, ask questions later. They're going to sell now. You don't need a reason, that is the reason right there. Slicing the 50 with massive volume. It's adios muchachos. So for me, that's it. So my formula doesn't work. It's not foolproof, not for every stock. Like I said, the 5% with a 5% stop loss cushion was not enough. I turned a profit into a loss if I was only up 10 or 12% there. So sorry about that. Longs there, that did not work out. Uber, another one that made a new high recently, and just this thing's getting cooked. It's down to its 200 with volume here, down 9%. So that's not a good earnings move at all. And this is why, you must practice risk management around these new data points for every, like I said, for every Carvana and Twilio, there's there's these disasters just waiting for you. This is Coinbase down 15%. No, thank you. Hood, they had a terrible quarter. I'm surprised it was only down 16% and only pulled back to its 50. I think, Bitcoin might be propping that one up. Anyway, let's move on to, Roku. Yeah, this thing cracked like 4 years ago. I don't even think it'll show up on the weekly app here when it had this nice little cup with handle, kind of like Elf, They look good at the top and then they fall out. That's why you have to follow the rules. You have to play by the rules. And Roku is down 17% today following its earnings report. And like I say, you don't need a reason. This is the reason, right? It's Wall Street's telling you, it's slicing everything with volume. They're just selling it. So you can't fight that, regardless if it's a good report or not. Estee Lauder, another crummy report from them. It's a one-way stock. It's going down. The story's done here. They have a lot of exposure to China, and China's economy is weak. We know that, and they're providing stimulus, but that's going to take some time. So Estee Lauder is dead on arrival. I talked about earlier the Microsoft Meta. Now Microsoft quarter was pretty good. Like I said, they don't need a reason to sell. This is the reason. It's below everything. And going into this quarter, it had already sold off a lot. And it was kind of wallowing around down here. And I thought, well, it's going to break above its downtrend line. It looks set up nicely, to break above this area here, but it just didn't. It broke downward. So that's all you need to know. You don't need to know nothing else. They're selling Microsoft, and you think, oh my gosh, it's a lot cheaper now than it was, back here in whatever that is, July. But you got to stay away from this one. This is radioactive. Even, despite, good quarters, good cash flow. Now, Zuck, I mentioned these guys were making new highs here. So this stock was near a new high, even though it had a good quarter. You got to expect some profit taking near new highs, and it's still only 5.9% off its 52-week high. So to me, it looks fine. It just pulled back today, way different than Microsoft, and it's 2.2% above the 50. So a visit to the 50s, likely here. All right. I've had enough of these depressing earnings reports. I want to go through some stocks exhibiting some stocks on my leading stock list. Obviously, Shark Ninja is going to get the boot, but that are showing, relative strength. They're not, powering higher or anything, but this is AppLovin, a software name. And I know the Nasdaq was down nearly 3%. This one's down just a little over 1%. Still way above its 10. It's 4.2% above the 10. So this is showing relative strength. Even though it was down, it's still showing relative strength because it's above its moving averages. And like this is one that if you have a big profit in, you could afford, you have some cushion. I wouldn't be selling this one. It could pull back to the 10 and bounce, could pull back to the 21, but if you have that cushion there from the breakout, you can sit there and ride through some turbulence. And there has been some turbulence in this stock. All right, a couple other ones that just random here. Walmart, it was flat on the session, up, well, 2/3%, not bad, but just cruising higher, not really impacted by Microsoft and Meta platforms. So, just acknowledging strength here. CAVA, the restaurant name, pull back to the 21, but still, flat on a day where the Nasdaq's getting crushed. That looks good to me. Same with Bros, right? Bros has been acting a lot better lately. It pulled back to its, well, these moving averages are converging, huh? Yeah. Bros is one to watch. They're going to report earnings next week, and I think they're taking market share from Starbucks. That's why I wanted to show you that one. Viking, this is the leisure services group, and we know how strong those stocks have been. They're not going to report to the 27th. It was just flat on the session. Flat when the market's like this is a good day. GEV, this one powered higher to new highs. That reminds me, what did CEG do today? Yeah, okay, pull back to the 21. It was, up 0.5%, not bad. And then VST is another one that, yeah, okay, these are starting to look pretty good here, actually. After the big moves, consolidation, they're going to report earnings next week, so it's something to look forward to. All right, POWL, which is another one in the power equipment group, kind of like Vertiv. This one, not bad. Pull back to the 21, finding support, and it was flat on the session. Vertiv, this one was down like the Nasdaq to nearly 3%, but just pulled back to its 21. So I wanted to show this here as Vertiv pulled back here to the 21, then kind of rallied into the close. So I wouldn't say it was a positive, but it just seems like it's going to find support there at the 21. We'll have to wait and see. It could definitely crash through it And then that'll force you to make some decisions. At least me, it'll force me to make some decisions. But right now, this is another one that if you got a good gain on it, it's pretty hard to part ways with it. They've already reported earnings. I'm just watching for it to get support at the 21 like it did on its earnings day. So Vertiv looks pretty decent to me. Palo Alto Networks, they're reporting on November 14th. Not bad, pull back to the 21, flat on the session. Take a look at the weekly. This stock, these guys are a cash cow. Yeah, I kind of like that little wedge pattern back to a moving average there for Palo Alto Networks. As we've seen this pattern being rewarded, but you got to be careful because the markets change, right? And that pattern has been rewarded, but we'll have to wait and see. Netflix reported 2 weeks ago and propped up the markets, and now still showing relative strength once again, making that little flag pattern here as it pulls back to the 10. Very strong stock. Waste Management, they reported recently. Yeah, this thing's set up in a base here. The market was better. I would put it on a ready list here. That looks pretty good, but it's just it's too spooky right now. I put okay, making new highs. All right. Victoria's Secret up 4% today. Nice move. RVMD, just showing you some strength from different, areas. This is a biotech. You got some retail. This one made a nice move as well. EXEL reported earlier in the week, another biotech stock showing well. Once again, that familiar pattern, of the pullback to the moving average and the pop. So, yeah, that one followed through today. A couple of stocks that I have on my ready list that I wouldn't say they held up well today. Yeah, okay. Duolingo was only down 2%. And yesterday it tried to break out of this box. This is a tell for me. Tried to break out of the box and then pulled right back into it today. So it's not the end of the world. It's still above its moving averages. And this could be like a, precursor to where it really wants to go. But if you're from Missouri, you got to show me. And this one has not done that yet. It's got to break out through that box. It's got to break out above 300. It's got to do it with some volume. And it just hasn't done it yet. It might stay in this box for much longer. You never know. And it also might crash below. And it also might just decide to, rip higher, which, I'm always trying to think positive. I think that's what's going to happen. But take it one day at a time. Spot pretty similar to Duolingo. They're in the same group. They kind of trade together. And this one's still trying to break out of that little box area at 389. But down to 2.25 when the Nasdaq was down 2 3/4. Not a bad day for Spotify. Just consolidating. Okay. So that's enough of the relative strength stocks. I'm just going to stop right there. Tomorrow we're gonna wait. In honor of the great Steve Jobs, I have one more thing. Earnings tonight from some heavy hitters. Amazon was one. The retail sales data was up, and I thought, okay, retail, Amazon's definitely in retail. And the Azure from Microsoft, so I thought that would help AWS, and they reported a strong quarter. You can see it's up 4.5% in after hours. So that bodes well for tomorrow for the QQQs that got absolutely wiped out today. Amazon looks good. Intel reported after the bell, and they're losing less than expected, but still a 9% pop for Intel. Not bad. That's a Dow Jones component, I believe. So that would help prop up that index. And then another company, the one from Cupertino, just flat. They beat on the top and bottom line. So I don't know. I think a lot is expected of Apple. It pulled back to its 50 today. Maybe it'll just squat there for a while between 220 and 225. We'll see. We'll see the reaction tomorrow. I don't put much credence into after hours action. Yeah, the big volume comes in during the regular session. That's the tell. CAR. This is what I mentioned earlier, that people are flying, they're traveling, but they're not renting cars. I don't know if they're using Lyft and Uber to get around, but they're not. Yeah, using Avis budget, man. Avis, that what was uh, a pretty bad miss in after hours. I believe it was after hours, yeah. Only down 1.25, but they missed on the top and bottom line. Oops, down 3.5%. Yeah, it was a pretty ugly report actually. Who else reported? Atlassian, which is Team, Team. They're up 16.5%. Thank you very much. So Amazon, Team, Intel, looking good for software, maybe some retail tomorrow, and the semiconductors. Hopefully, maybe. We'll have to wait and see. The mining stock, Ego. The gold is flat after hours. We'll have to wait and see tomorrow. I didn't really look at that report. And then U.S. Steel, the Japanese companies trying to buy this. I don't think it's going to fly. So we'll have to wait and see. I'll have more in the morning on this. It's up a little bit after hours. Anyway, and then tomorrow we have Chevron. Oh boy, yeah, the commodity is just so low that it's hard for these stocks to go anywhere. Although we did see ConocoPhillips this morning, make a nice report and move 6 something%. So we're going to hear from Wayfair tomorrow morning. This one's, man, it's been murdered. And then Dominion Energy is going to report in the morning as well. And then Charter Communications. CHTR Charter Communications will report in the morning. So we'll have more on that tomorrow morning. Anyway, at mcstockcharts.com, we never give up. Hang in there. It's not the end of the world that the Nasdaq slices its 21, I should say. But you got to be cautious. You got to practice risk management. You don't want to be just jumping in both feet and diving in as stocks start pulling back because we don't know how far they're going to pull back, how low they're going to go, and how long it's going to last. Anyway, thank you for watching at mcstockcharts.com. We never, ever give up. So you don't either.